And with that, we're going to the next panel, which is going to be a real highlight again. So the host for our next panel is Eric Newcomer, who is the founder and editor of the venture capital and startup newsletter Newcomer. And prior to that, he was, among other things, a reporter at Bloomberg and The Information, which is one of the key tech journals that a lot of the founders in Silicon Valley and all over the world read. And he has covered startups and the VC ecosystems for many years. So he's in a perfect position to explore the topic with his panel about venture capital and the European tech ecosystem in this panel. Please welcome Eric and his panelists. Thank you so much for joining.
Hey, welcome to the panel on venture capital and the European tech ecosystem. I'm Eric Newcomer. I write the venture capital newsletter Newcomer, and I'm the American here, but I've spent a lot of time digging into startup world and the venture capital world in Europe, and so super excited to talk about, all the American firms rushing in, all the money flowing in, all the fundraising that's happening, and just the excitement and competition that's going on in an ecosystem that I think felt underappreciated for many years and is now really, I think, being totally validated. So it's a really exciting time to talk about this. And we have three great venture capitalists, I think all founders of their firms or founding partners. And I'll let them do their own introductions. Let's keep it short because I think there is so much to talk about. But Mattias, you want to jump in first? I see you next to me on the screen.
All right, perfect. Yeah, I will. So I'm Mattias Ljungamn, founder of Moonfire Ventures, which is a pre-seed and seed fund focused on Europe, where really, what we believe is that there's a big opportunity within the pre-seed and seed sector, that it's underrepresented, underinvested in Europe. A lot going on in the later stages, but I think the seed stage is unique. And on top of that, we use data. We use a lot of data in terms of what we do. So we have our own engineering, building our own software to help build up our fund. Prior to Moonfire, I also helped found Atomico, which is now a multi-billion-dollar fund.
Philip?
Yeah, hi. My name is Philip. I'm one of the founding partners at Cherry Ventures, Berlin headquartered seed fund. We also focus on Europe, so I guess that's why we're both on the panel. And before Cherry, I was an operator and founder. Started a company when I moved to Berlin in 2008. Directly failed with it, so learned a lot. And at the end, it was also a very, very different time in the European ecosystem that we can speak about today. And then joined the founding team of Zalando. Obviously, that was a much more successful story. We IPO'd the company in 2014, and then I switched to the dark side and became an investor.
Great. Hussein?
Hussein, also on the dark side, running this venture fund. We founded it about 8 years ago. Like Mattias said, there's a dearth of kind of seed and pre-seed funding. We back European businesses that we think can go on to scale globally. We've created about 57 billion of kind of market cap within the portfolio in the last 8 years, with 2 IPOs earlier this year. It's been a good journey. It's nice to found the venture fund. It's very different than when I was founding companies, which, to be fair, felt a lot more productive and better for society. But it's been a really nice journey to see Europe kind of transform over the last decade into a thriving ecosystem and be part of that.
Great. Yeah, I just wanted to start on the, how crazy does it feel? Or, you guys have been in this for a long time. I'd love, how crazy does it feel to you? Any sort of data points or just anecdotes that sort of are telling on that front? And then I guess the secondary question is just, is that good for your business? Like, it's a hotter world for the startups, but then there's more competition. Netting out for you guys, does it feel like sort of all the heat is a net positive? So whoever wants to jump in on that first.
I'm happy to have a go. There's loads of data, right? So now, 5 years ago, there was $20 billion companies. Today, there's over 200. When we first started Atomico, there was $1 billion company. And I think people even thinking about $1 billion companies was a crazy concept. So, when we started off in 2006, we went around talking to lots of different people in the ecosystem. We said, well, look, we're going to be investing in billion-dollar companies. And basically we're laughed away. So the world has changed dramatically. We're in a very different place. And like you say, it's a lot more competitive. There's a lot more capital. But I also think that it's overall just been a benefit. Like essentially, I think all of us have, as we talked about our introductions, it's just become better and better. And I think that will continue. It's still early days. There's a lot of that public money, that I think is in the trillions, that is looking at how is it going to get into this private market. So the journey is going to be a long one, but it still is the early days.
Yeah, I think what you see right now, it's definitely a great time to be an investor in Europe at the moment. It's an even greater time to be founder in Europe these days. I think if you look at sort of the numbers, I think 2028 European unicorns were minted. In first half 2021, it was 23. So, I mean, even like in the last 12 months, things have accelerated a lot. And we see this obviously in faster, bigger rounds, and obviously also sometimes these crazy valuations. But I think in general, what we see is that the flywheel is working. I think the ecosystem has proven that it can systematically recycle capital and talent as well at scale. And I think European founders think bigger. They want to build bigger stuff. And obviously, if that's the case, then it eventually also means much bigger outcome.
Hussein, I might throw it to you. I mean, what do you think happened at this? Why is this a pandemic phenomenon, or what would it does feel like there's an inflection point, not just sort of a gradual building, or how would you what happened here?
Yeah, so I started investing here in 2005 when I joined the big U.S. fund that opened up, and it was one of the pioneers, Axel, in terms of like kind of setting up shop locally in Europe. And unfortunately for them, they were probably about 10 years too early because there wasn't really very much to do in 2000 to 2010. I remember when you'd come up with you'd try and build a presentation of like iconic European companies. You'd have one, which was Skype, which is, the Atomico guys. Like that was it. You'd really struggle to come up with other logos. Inflection to me happened around 2013, 2014. And that was largely driven by a whole confluence of things. The first was the financial crisis, was a huge boom because it basically meant that people were anti-establishment because the establishment weren't hiring them anymore. So people stopped going into financing, consulting, and people started going and doing something a little bit more productive with their lives. And some of those folks ended up in the tech industry. So that was kind of one of the big shifts, especially for the younger population, like kind of fresh university graduates. And then the other big thing was we had these platforms, which we kind of poo-poo a little bit today, Facebook, being one, and, iPhone's App Store being another one, Google Play being another one, which kind of totally leveled the playing field for European companies, because all of a sudden, from one single country, you could target users, in all the other countries in Europe, which are very, very different than your own country, and then all over the world, which meant all of a sudden you could get to global scale. And all of these things kind of built upon itself, and exponential curves are weird, right? Because they look really flat. So in 2013, 2014, 2015, as you're telling people that the world has really changed, these are all the catalysts with that kind of force to change. Most people don't believe you.
Right. And
then you look at 2021 and it's like, wow, it all of a sudden looks like it's happening, but it started happening actually quite a few years ago.
I am curious how much you all are focused on companies that can be sort of global winners. What's your willingness to bet on a company that's really going to be dominant, in a particular region within Germany? You need cross European winners. I'm curious how you're thinking about how global these companies need to be, or if the size of the markets in some of these industries can be large enough to be a leader in, Germany or something like that. I mean, Philip, maybe you want to take that.
Yeah, I mean, at the end of the day, we're looking for big outcomes, and that usually means that you have to have international ambitions or even global ambitions. I mean, the European market is a large market, right? If you look at Zalando, for example, we are just targeting Europe, and it's now, I think, over 20 million euro market cap business. So it is possible to build very large businesses in Europe alone. But then what we're seeing, I think at the moment also, is that the ambition level is global. It's not even only European. It's really to build the best product in the world and be able to distribute that product wherever it is. And I think Zane mentioned it, today's platforms enable that. And
Cherry's a super interesting firm. I mean, what's the German founder percentage, or how do you break down? I'm interested in how regional you need to be to win deals, or how you think about that.
So I think from our portfolio, probably 40% is Germany. Then we have a few people on the ground in London. We have a partner in Stockholm, Sweden, and we also have a team member in France. So we are sort of pan-European firm, but of course, we're originally we're German. I'm German, so of course, historically we've done most of our deals there, and it's also a super exciting ecosystem.
Mattias, I mean, can you talk about stage? And I mean, this firm is Moonfire. It's pre-seed and seed, right? Or how did you think about it in starting a new firm where you would have the biggest tactical advantage, and why did you go with those rounds?
Yeah, well, first of all, it's probably the area that I just love the most. So I've kind of worked in all parts of this.
It's good to do what's fun at the end of the day.
Yeah. At the end of the day, you want to do what you like. So I've done later stage investing and whatever, and but I did also see that really, if you compare Europe to the U.S. had a kind of revolution that happened in the seed area, and there are lots of really good, strong, reputable funds with records of being able to create billion-dollar companies, clear performance that's just many of them even getting between 10 and 15 times their fund. And I think Europe is sort of at an earlier stage of that process, but you're getting stronger and better early stage funds going in, and so I think it's going to be a really exciting part of the ecosystem. That like you talked a little bit about also U.S. funds, and I think when you're investing at the earlier stages, not as much interest globally as yet, but it will be in the future as we have a sort of death of geography.
I'm really I'm interested in that sort of co-opetition versus competition with the U.S. funds. I mean, it's clear, a Sequoia, and then obviously the traditional Excel index, which are sort of global funds with a strong footprint in Europe. I mean, they want ownership, but it's often meant working with local funds in the seed, whereas it's more competitive in the A. Or I'm curious, do you think in the seed or pre-seed they're lighter touch, even though they're very competitive firms, because they want the flow that they might miss if they fought you on some of the deals? Or I don't know.
I think there's going to be increasing interest in the seed area and maybe even down to pre-seed from these multi-stage funds. They're going to be playing in that area. They're going to be fighting for their ownership. This is all very healthy stuff for the ecosystem. It makes us better, makes us stronger. But at the end of the day, it's not really the area that they focus on. And there are a lot of founders out there that want to have a different type of investor depending on the stage that they're in. And they realize that they can work with other investors later on, and there might be better fit for purpose at that moment in time. Whereas, firms like ourselves and the rest of the people on the panel, we know what it's like, and we have so many other companies in this sort of almost like a same cohort. So you're also getting that ecosystem among the other other portfolio companies that you can work together with. So I think the founders are sort of saying, yes, we do also want ones that are stage focused, that makes sense for them. But there's also the opportunity as well to work together with those later stage funds, and a lot of them are very interested in having that type of partnership, and that means a lot to them because for example, Sequoia hosted a really big event earlier this week, and it was all about the seed funds and working together with seed funds. So they realize that this is a relationship that they want to foster.
Right. I'm warning you that I'm going to ask for a company in your portfolio you're very excited about and a company outside of it that you think people should watch. So I'm going to ask that in a second. But first, Hussein, I mean, the climate in London right now, I mean, it's a more, it's the most established sort of tech market. How how much are you investing out of startups in London versus sort of the broader Europe, or what's your sort of focus in terms of region, and then maybe a little strategy?
Yeah, we're pretty broad as far as a firm goes. So not an unsurprising amount of money goes into London or into the UK. Our last deal was in Nottingham, which is it's in the UK but not in London. It's kind of a smaller town. We've done something in Belarus. We've done something in Ukraine. So technically not even EU countries. We're pretty open-minded. I mean, I'm also American, and Americans are pretty bad at geography. So
it's amazing how many Americans there are running around European venture, actually. But yeah,
a lot, and I think an increasing percentage. And if you look at like the interesting companies, I think in Europe, something like 75-76% of them are done by like U.S. firms or U.S. people. So like it's basically a U.S. dominated industry from a venture perspective, which is surprising. It's kind of where the risk capital kind of really is the deepest. The attitude is the deepest. But we're totally agnostic about where in Europe something is going to come out of. Our biggest regret was, in Romania, we met Daniel at UI.
Oh my God.
It was the dumbest mistake that we've ever made in the firm, and a very expensive life lesson to not have written that first check. And then
did you meet? Was that you, or who did that?
Yeah, it was me, and we both. We're only a 3-person shop.
Yeah, yeah.
When we back then,
not to give you a hard time, but it's always a good. The past is, it shows you're willing to cop to it. What made you say no? Was it a no, or you just didn't fight hard enough to get in, or what happened?
So he needed a little bit more money than what we were able. We were pretty poor back then as a firm, so we're pretty small, and so he wanted a bigger check than we felt comfortable writing, or that even if forget comfortable, that we actually could write. And he was right at inflection of traction. I mean, ideally, what we should have done is like what Mattias is probably doing nowadays on the data science side, and tracked them for about 3 months, because it was kind of obvious 3 months later. And at the time that we met him, it wasn't so obvious. And then the worst part about this is the old firm, who you always have a little bit of a rivalry with, right? Because it's like your old shop. They did it, and it's the rest is kind of history for them. It's a great IPO. It's a great win for everybody. It's a great company. But yeah, it's a sad regret that we didn't do it. But we're agnostic about geography. In our mind, geography kind of doesn't matter. The one thing that I would say does matter is we're still hyper focused on winning in the U.S. So all of these outcomes in Europe, and it's kind of back to your earlier question. These days, like, you can build a big company. Like, you can get real scale in any European country by focusing on a niche. Like, you can build a multi-billion-dollar company. But multi-billion-dollar companies are not what we should be trying to build. We should be building companies that are tens of billions, if not 100 billion, if not 500 billion. And the only way you're going to do that is if you win globally. And globally is really like kind of a code word for win America, because you're not going to win China. And those are the two markets in the world that really kind of matter. And they're also number one, number two in the tech economy. So you've got to be a European company that's like hell bent on winning the U.S. market. Yeah. And we seeded Deliveroo, which did not go into the U.S., and DoorDash, which is only 3 months older as a company than Deliveroo, today has a $74 billion market cap. Like, we're super happy with Deliveroo. It's a $7 billion market cap, but 74 versus 7, like, it's kind of clear where you want to be.
Right. All right. It's always fun to hear about companies, people looking for jobs, or they want to follow you later or whatever. So, Philip, do you have one in the portfolio and one out of companies you really think should be on people's radar right now?
Well, it depends on what stage you're looking for, but let's maybe do seed company, because I think it's maybe one that not everybody knows about. So not a company that has raised, big follow-on, but to Hussein's point, like, and location matters less. Maybe I'll mention a company in Poland, a company called Salior, which is a open source headless e-commerce infrastructure company. So they're basically building a very, very scalable e-commerce platform. Have been like growing extremely fast, overtaking Magento, which is sort of like the traditional platform that actually we also used back in the days, in all dimensions, and are growing extremely fast. So that's
one of yours.
It's one of ours, yes. Yeah, and which also says, like, they're in the middle of nowhere in Poland. But
how did you find them?
So, I obviously know this space quite well, and saw basically how they were taking off on GitHub, and then actually reached out to the founder, and then we ended up chatting over the summer and invested at the end.
And what's the name again? Say it.
Salior.
And then what's one that either got away or just that you see now is probably too late stage that you're really bullish on?
I mean, too late stage and we missed it. I think there's a ton of examples.
I know there's a ton, but just,
I mean, one that's in front of our doorstep and we missed is Trade Republic. I guess that's a big one, and it's a big miss also. I mean, we with most companies at that stage we have spoken to and we've seen, and this is one we didn't do and we would have liked to do.
Mattias, what about you? A portfolio company you think people should be watching?
Yeah, so one of our portfolio companies, Humans, we're really excited about what they're doing. They also became a YC company, and they're growing at pace. It's a really exciting business, taking on the HRIS space. So basically, allowing people to do a bit of sort of plug and play and utilizing the type of human resource tools that they think are appropriate for them, for that company or what geography that they're in. But we're just amazed by the execution capabilities of the team, both in terms of the product that they've built, how quickly they're onboarding customers and how quickly they're moving, and the great hires that they've made, and then all the new sort of customers that they're just onboarding at pace. So we're super excited, and it was fun too because it shows a little bit, I guess, an insight to what's happening in Europe too, because we got a whole bunch of U.S. angels putting money into the round. So you have like Scott Belsky, and you have a whole bunch of Stripe people, and so it's a little bit of it became a little bit of a party. But again,
did that make it hard? Did you have a smaller position because of that, or? Yeah,
what it does, it was obviously effects, but I mean, we came in early, so we're still the sort of largest investor. But what it does mean that we probably could have had more ownership.
It's Human, spelled like HUMAN or
HUMAANS.
Humans. Okay.
Yeah. And it's a fantastic founder. The two founders are fantastic. So
and I feel like everybody's giving us a miss now. You guys are the earliest, so I don't know if your firm has one traumatic yet.
Of course you do. Yeah. No, I have two painful misses that I did. Particularly painful because it's areas that I focused on and I feel like I comprehend. So those are always the worst ones. So Rare was one of them that had the opportunity. It was there, and I was like, "Hey, really?" Scratching my head. Anyways, big miss, and then the other one was Axie Infinity, and they're both kind of in the same area. And again, that was again unusual for Europe. It was a little bit, in terms of how they were structured, and quickly the valuation was moving at pace. But that wasn't, that wasn't necessarily the only things that was like the decision making process. I thought it was just also unusual where you have to spend a lot of money to get involved, and so there were some other things. But I just loved their vision. I just thought what they were aiming to do long term was really exciting. But there's another part of me that also thinks that whole, I don't know what they do, but essentially it's the intersection of the world, the blockchain world, and NFTs and games. So that's what both those companies kind of do. And my view too is though that this is just the beginning of what's going to happen, because having economies in games, which is an area that I love investing in, is just normal. So once these two areas come together, we're going to see a whole different, where you're going to have both economy, community, and gameplay, and those are going to be quite exciting constituents of a new sort of form of company.
And we made you, or you relived a painful one. What's a portfolio company that people should be watching?
I think our most interesting company in our second fund, which is our last fund, is a company called Peptone. Caveat: I've never met the founder in real life. I've only interacted on Zoom, and WhatsApp, and broadly on a regular basis. And they have figured out how to simulate disordered proteins. This is very scientific and exotic, so I apologize. But disordered proteins, in Hussein layman speak, is proteins that don't really fold correctly and have wiggle in them. They have movement in the wiggle, and when you create a therapeutic and the thing that you're trying to bind to wiggles, the only way to create a therapeutic that actually binds the wiggle is to come up with the inverse wiggle, which is what they do in software. So they took a $125 million failed project at a big drug company and they turned it around and created a phase 2 clinical drug. They've got 6 of these in the pipeline. This could be like a multi-billion-dollar type company. Never met the founder, wired, kind of sight unseen. Companies in the middle of nowhere in the mountains of Italy in the Dolomites.
Wow.
It's kind of a distributed team. That's where the founder is. They're eventually, I think, going to move to Switzerland and actually now set up a proper lab, et cetera. To me, that's the most exciting. And then my failure case was, besides the UiPath, which I can relive, was also Axie, which I think is really interesting. I don't know the first thing about crypto and games, and I'm not an expert, but the idea of kind of taking crypto kitties and kind of Pokemon together and turning that into a game, which is basically how I describe Axie, is fascinating. And, they only raised like $1.5 million. I wish I wrote that ticket just to learn, which is half of what you have to do as a seed investor.
What on the sort of remote, you're talking about investing in this startup without having met the founder. I'm curious, how much are European startups going to be European startups? All right. Part of what's going on is that you can be remote anywhere. Do you think in particular, that's happening in the United States too, but do you see more pressure on European companies to just be fully remote, especially given a lot of you want them to be sort of dominant in the United States as well? Or what's sort of your current thinking on how much remote first is what you're recommending to your portfolio companies?
Can I just change that a little bit? Because
sure.
I maybe Hussein might not agree with me on this, but I think that's wrong to sort of say that the focus of European founders is that they have to go and get the U.S. So it's another way around. U.S. companies still have to get the world.
Right.
You know what I mean?
Right.
They're not going to be big enough either. And if you look at the size and strength of Facebook and Google, it's not because they just survive in the U.S. alone. If you see what I mean, there'll be nothing if they stayed there. But they have global dominance, right? So
it helps to have a huge cash cow, right, from your home market,
of course.
Which is the U.S.
Yeah, but of course
you're never going to have the same cash cow if you're a UK company.
So let me just finish. So I think that yes, you can build a big business, and by the way, you have companies like Klarna, which, to be honest, the cash cow is not the U.S. It is only growing in the U.S. It's now $1 billion revenue business. It's always produced a lot of cash, and it will do that across many European countries. The U.S. is going to be great for it to have that global dominance and position in the market. And so I get, if you look even at Google, a lot of its revenue is coming from outside the U.S. I think probably, I looked many years ago, maybe it was 10 years ago, but by then it was already 50% of revenue. I'm sure it's a bigger, maybe even bigger percentage today. So I think yes, of course, those other markets are important, but why is it important is because what are we investing in? We're investing in global leaders. Why is everybody getting excited about Europe? It's because they questioned whether Europe can produce global leaders.
Right.
And now they're certain about it. They're like, well, no, it's proven. You have multiple global leaders. And our belief is that you're going to have many more. So that's what the sort of enthusiasm about Europe is that, no, they're not going to be just producing regional winners. They're actually going to be they're on course to be producing these companies that are going to be playing on the global market.
Well, I'm happy to have a little. I agree with a lot of what you're saying. Hopin obviously is one of the sort of most zeitgeisty companies around and has been pretty remote, very quickly focused on the U.S. And I do think there's a case that a lot of European VCs have made to me that you have that a lot of the big SaaS businesses in particular, and sort of if you're selling to businesses, it makes sense to go to American company customers first, since you have to quickly move to America. But certainly, we talked about Trade Republic before. There are so many, you said Klarna, there's so many businesses that are deep Europe.
Don't forget
50%.
countries like Japan, which are really big economies. They're still the third largest economy in the world. So there are other places, but I agree that the U.S. needs to be on the map, but there's many different places that need to be on the map if you want to become a global winner.
Yeah, then Eric, I think you're right. Over 50% of the global software market is in the US. So I think if you're a SaaS company, that's where you will go or where you will focus.
Remote. I don't know who's saying. Maybe none of you have strong. Okay. No, I love the debate on that. It's on exactly the core issue.
So I think, to be honest, it doesn't really matter. I think what's new is it anything's possible? You can be fully remote, you can be hybrid, you can be central. Obviously, remote has a lot of advantages because you have access to talent around the world, and a lot of companies take advantage of that. But there's also companies that simply wouldn't work culturally from the DNA, wouldn't work remotely, and those are then set up in a different way. I think so. So for me, it's really not. I don't know. Maybe the others don't share this view, but I don't think it's that big of an issue actually.
Yeah. I want to. We're hitting the end of the time, and I want a good concluding question. I think this has been so fun. There's clearly so much excitement in Europe, and what a fun time to be an investor there. Outside of your firm's, core market, to the extent you'll admit having one, what's a city or sort of cluster in Europe that you're most excited about right now, or where you're really excited about finding new founders and you think is going to be a place to find sort of the next cool company? Hussein, do you want to go first?
So I don't think there is any one city. I think almost all the major cities in Europe, and Europe is blessed with a lot of really good, interesting ones, all have activity. And so even places that 5-10 years ago you might have dismissed, like Paris, have rebounded in a really big way, and like Macron's spending a ton of money trying to catch up to the UK or to Berlin. And to be fair, I think he's probably surpassed Berlin. He's probably kind of trying to catch up to London at this point. But Amsterdam has a bunch of stuff happening. Spain, like Madrid and Barcelona, both have stuff happening.
All right, I'm not going to let you blitz them all. You got to go. Yeah, but it's a super interesting point on France. Philip, you want to take a stab at it, or you have a pen?
No. Obviously, there's a lot of funding. There's a lot of interesting companies. I do think in terms of the outcomes that we've seen in Europe over the last years, I think it's still sort of London, Berlin, Stockholm, Nordics. And Paris a bit sort of behind on that KPI. But if you ask me, like, what am I excited about? I think, first of all, location matters less, right? So good companies can come from anywhere. And where we actually are seeing much, much more than, say, a few years ago is in Eastern Europe. So Poland, I'm very excited about what the quality of talent and engineering talent that's over there. So
Mattias,
we'll definitely spend more time in the East.
You're driving us home on this? What's your view, or what's exciting you, sort of regionally? What cities?
Yeah, I'm sorry. I have to agree with everybody. I think the difference is with Europe is that it and the way we're evolving is that it's not doing what we saw in the Valley of it being a sort of cluster in the same way. There is a little bit of that. So you have some dominating areas, but what's really interesting that there are. I said 17 companies in the past that were all the $1 billion. 17 cities where all the $1 billion companies came from, but I think it's up in the 20s now. So, to me, we're seeing great companies being produced all over Europe, and I think geography in itself is not becoming as important, even though there's certain regions that are continue to benefit from their position in the market. But I think Eastern Europe is going to be really important. I think Philip and Hussein have sort of touched on that. And I think it's going to be really exciting to see how those ecosystems explode, because success breeds success. And things like UiPath is definitely having a massive impact on that part of Europe.
Totally. Well, thank you so much. Thanks for listening to us, and everybody have a nice day.
Thank you so much, Eric, and dear esteemed panelist. Was wonderful to listen to you. Thank you for joining us at Techsylvania.